Hello, it's Brad Laurie, your BlockchainBrad, and today we are speaking about all things equilibrium. And to do that, we have the founder and CEO in the hot seat right now. His name is Alex Melikhov. Thank you very much, Alex, for being here to explain clearly what you're doing in equilibrium.
Hi guys, thank you very much for having me here, and super excited to touch base on the equilibrium developments on Polkadot and all DeFi related stuff.
And thank you again for making the time. And for all those wondering, this is entirely free. And it's important you know the whole reason for this is so we can learn more from the source. And there's none better than the CEO and founder himself. And also it's important you know that I am not invested and I'm certainly not being paid for this educational opportunity. So Alex, thanks again for providing this for all of us, not just me. Now, equilibrium, that's a term, I suppose, that we should start with. What does it mean? Why did you choose that term? And I guess, in a nutshell, what does it stand for?
Yeah, so in nutshell, equilibrium is the state when opposite forces are balanced, and that's what we are aiming to achieve within our DeFi product line that we are building on top of Polkadot. So basically, the idea behind equilibrium that we will have multiple cross-chain liquidity pools on various blockchain platforms, which will be all connected via bridges and then plugged into the core business logics on the Polkadot platform. So I will touch on more details regarding the business logics and how exactly the sort of core system components work in the course of our today's conversation. But in broad strokes, we think that since we're building the conglomerate of DeFi products, I will touch on that as a layer as well. We think that these sort of liquidity pools will be basically complementing each other and make system more balanced. So it's kind of that opposed forces that I mentioned when I was explaining the equilibrium.
Got it. Okay, well, for those who are wondering, we've also had pre-chats for me to better understand in preparation for this interview. Now, one of the things that was interesting you said there was liquidity pools. Now, let's go back to some of the slogans and statements made by Equilibrium. And the first one, obviously, is the first cross-chain or interoperable money market on Polkadot. Now, as I understand, it's not just Polkadot in the past as well, and you're now focused, as you've referenced, on Polkadot. Do you want to just explain a little bit more about what interoperability means? Why does it matter? And why is it so important right now in the context of Polkadot?
Yeah, sure. So first of all, maybe I give a bit more color on backgrounds of our team because it's kind of may explain some stuff regarding interoperability and why we're taking this path towards interoperability when we're building Equilibrium on Polkadot. So first of all, we've been working together since 2017 for quite a while, and we have a bunch of experience in building on various platforms, including Ethereum. We were actually pioneering DeFi on the EOS platform back in the days when we kicked off the development of the first decentralized stablecoin there. By the way, it's quite successful, still up and running, called USDT, with I believe most of liquidity across all DeFi applications on EOS so far. And we actually always were considering the interoperability as a huge sort of opportunity for DeFi builders, because eventually, first of all, it's from the practical perspective, it makes a lot of sense, right? Because if you're considering building on various platforms for obvious business reasons, right? Because you want to get access to various communities, to liquidity on various blockchains. In most of the cases, you need to roll out the whole application built from scratch on entirely new technology, right? Per se, I'm always giving this example. So when we were building on EOS, we were thinking of what will be the next sort of platform that we want to interconnect with and to extend our product line on. And per se, if we approach, I don't know, like thesis, right? Do we need to build things off the ground on Mikkelson, right? And definitely it's really effort consuming, right? You need to put a lot of development efforts into rolling out new business logics on the new blockchain. And we actually were thinking, why don't we just build things once, build the core technology, roll it out on some so-called layer zero blockchain platform, and then just interconnect other blockchain networks with our core application.
And can I ask you just to jump in there? Obviously, the layer zero narrative refers to Polkadot's architecture in that it is interoperable with several other parachains, and also obviously because the parachains are emerging this year. And then we see the likes of all those other layer one technologies that are now really showcasing their value. Now, in that mix, we know that Ethereum certainly has been a serious mainstay stakeholder and a very serious position holder. Perhaps, it's in that pole position right now because of its network effects. Now, in that context, you mentioned EOS. So why not Ethereum, in the early days when we didn't have the layer zero narrative or the opportunity to really engage as you are now?
Look, first of all, we really appreciate what Ethereum developers actually did with to the ecosystem, how they developed this vibrant DeFi space and actually became the biggest DeFi sort of hub on the entire crypto market. And actually, they were definitely pioneering in that. And back in the days when we were building on Ethereum, we actually were one of the first developers building sort of lending applications there. It was even before DeFi term actually came into our vocabularies. So it was really, really early days for everything. However, we always been looking for some opportunities to develop on platforms with more network capacity, with more flexibility in terms of building the core logics. Because if you look at Ethereum how it was in 2017, it actually represented certain congestions for development as well, right? For now, obviously, most of these congestions has been overcome. The roadmap towards Ethereum 2.0 looks pretty decent, and definitely more and more congestions will be eventually forced and basically solved. But again, if we get back into 2017, 2018, there were some obvious difficulties with that, and we were always looking for other opportunities.
I appreciate that. I appreciate that. I just wanted to jump in and also talk about EOS in that context. You referenced there was some bottlenecks, there was some congestion. There's no question EOS had its own challenges as well, its own inferences of centralization with its limited number of nodes even. And then you see the likes of Dan essentially exiting at some point. So obviously there were some challenges there. Did you have any backlash, or did you have any responses from the community? Because initially you did work with EOS. Naturally, you were trying to work with different technologies and different parties and different teams. But now that we are into 21, I think it's fair to raise these questions before you really start to talk about how you progress so much into this integration with Polkadot.
So look, we still consider our experience on EOS quite successful. We think that it was really good experience. Again, in 2018, EOS looked really promising because they just launched their main network. The development activity around EOS was outrageous that days, and so we decided, why don't we become the first DeFi applications there? Because we saw we actually considered that as a huge opportunity, right? Because we could be number 2, number 3 on Ethereum, but if we become the number 1 right away on the ecosystem, which actually looked really promising. That was really good for us, I think so. And actually, again, we always were looking, we always were considering ourselves a blockchain agnostic team, right? So, and actually the sort of interoperability was something in our minds always in the course of the development on the whole product line.
And that's why I really wanted to talk to you, because obviously from the outset you'd wanted to work with the best of the blockchains on offer. That was clear, and initially with the EOS sort of bet on given the code analysis, I'm assuming the team really did look deeply into the code offerings that were there for sure. But now you're going one step deeper, literally one layer deeper, because you're looking for that interoperability layer capacity. And now let's go into the why of the Polkadot. So essentially you have all these different aspects built into a quadrant with lending platforms. You've got professional grading, cross chains, the DEXs, the cross-chain liquidity and also the synthetic asset generation. You know all of this far better than I, of course. Do you want to touch on, I guess, over an overview of how the different components work in, I guess, a nutshell statement to explain what is the platform, what function, what does it formally do, or what does it fundamentally do right now?
Yeah, sure. So first of all, if you are considering building a new platform on DeFi, you can clearly see the tendency that most of protocols are going way beyond that, just building just one primitive. So per se, if we look at I don't know, like synthetics, for example, right? They started off with building up the platform just for synthetic assets like synthetic gold or synthetic stocks, whatever. But eventually they ended up with all synthetics things, and beyond that with DEX, with various other DeFi primitives, and so obviously with their own stable coin. So, and I think that building this conglomerates of DeFi products is something that is very relevant to the current market state. And actually, you can look at that from different angles. So the first approach that you can take is basically building the sort of aggregator, right? So it's also makes sense. We think that the guys from per se 1inch or Refinance, they're doing a great job. However, I think that this path obviously has certain drawbacks. Like per se, you're taking the advantage of the third-party technology, but you cannot affect the development of this technology, right? And you simultaneously taking the risk of that technology. However, when you're taking the different approach, the approach of building the conglomerate, you can think of that as of building something off the ground, as you have the greenfield to design the platform, the core components of that, and basically the economy model, which is underpinning your products on top of this technology. And for us, having this experience with building finance application. We have really experienced team in that. As I said, we've been working together for quite a while, since 2017. So we have experience both in building on blockchains, on various blockchains, and obviously in building specifically financial applications, because most of the team have the background in traditional finance and banking, and we definitely are aware of how these things work. And that actually was the consideration when we were just approaching building on Polkadot, right? Because on the one hand, we had the entirely new ecosystem, just brand new, just literally just launched, right? And we also have the advantages that Polkadot brings on the table, which is obviously the ability to do heavy computations in trustless environments. And on top of that, we had a really greenfield to design. So we decided to create the platform, which will be really unique and bring innovation in the space, in the industry. And obviously, the cool thing here that we were not replicating any of existing DeFi concepts, any of existing DeFi primitives, because everything in the system in Equilibrium is designed from scratch, right? And we actually have quite decent architecture, which is underlying the product line, all these conglomerate of DeFi products that I mentioned. And basically, the platform itself is comprised of the comprehensive lending platform and the professional grade decentralized exchange. So we think that both of these sort of core components of the platform are complementing each other, and we don't think that for per se lending can exist just in standalone mode, right? Because you never borrow just for borrowing, right? You need to borrow for doing something. Like per se to go short, right? Or to potentially to open the long leverage position somewhere in the exchange. And from our standpoint, building, connecting everything in one platform makes a lot of sense, because we are giving the opportunity to our users to utilize their loans right away on our exchange. And compared to other players who are building on Polkadot per se. We are standing for more sort of professional approach here from our standpoint. Like we are building the audit book based exchange, which will be cross-chain, high performance, and it will deliver the functionality of the spot markets with margin trading out of the box, because the exchange will be leveraging the lending platform. And on top of that, we are expecting to build the perpetual markets as well, which definitely will be interesting to our users. In terms of the lending platform, we have certain functionality. We have our native stablecoin called EQD, which is backed to dollar and backed by a real true basket of collateral. And actually, like I will touch on that as well later, like the baskets, collateral basket functionality, we think also distinguishes us from other DeFi platforms, because the basket of collateral definitely allows users to mitigate the volatility risks and so on and so forth. Also, the lending platform obviously has the pooled lending functionality, the synthetic asset generation functionality and stuff. And what's the most interesting, that it might sound that we have literally a lot of things to build on our plate. However, thanks to the really smooth architecture that we have in the platform, we can basically string all these DeFi use cases on this architecture, and it doesn't require that much overwhelming DeFi efforts from our development efforts from our side, right? And maybe if you wish, I can touch on
I might actually
level deeper. Yep.
Well, because of the length of the interview, obviously I want to go through. There's so much to get through in terms of questions. But what's clear is that you've spoken about interoperability. That's clear that that's planned for several other blockchains. But then there's also the interoperability of the different products that you're building, those different primitives, as you mentioned. So you're not just a protocol, you are a platform. Now we go back to the money market for a moment. That is essentially what you are in an interoperable sense. Do you want to just explain a little bit more about what it means to be an actual platform when it comes to being a money market, as opposed to the term we use more universally, I suppose, in finance today?
Yeah, sure. So first of all, as I said, the platform is connecting various liquidity pools that we have on various blockchains, right? And this liquidity in these pools is utilized in these so-called money markets, right? And so it actually can be used both as collateral liquidity. It can be used as liquidity for lending. And by the way, on top of that, we're introducing very interesting system functionality, which is bailouts, right? And so there's something which is really unique to the markets, and really makes us different to other platforms. So essentially, bailouts is the mechanism for managing debt. So in case of debt liquidations, in case of margin calls or some market turmoils, we are not performing any kind of auctions, because we have this bailout liquidity which is settled in advance and provided by specific users called bailsmen, who are actually earning additional yield of their funds by securing loans in the system eventually, right? And this is also the interesting components of our system. Actually, like all these things combined are making the money markets spinning. And actually, like again, on these money markets, users have opportunity to lend out their liquidity, to borrow crypto liquidity from these money markets, to secure loans in the system if they wish to take more risk and get rewarded for that significantly, because bailsmen, they're earning a significant fraction of interest paid by borrowers. And maybe what's the most interesting, like in the context of money markets, we are taking a really different approach, which is opposed to the approach of asset utilization when we are assessing borrowing costs. Actually, it's how it's implemented in Aave or Compound. You basically the interest rate, it depends on the asset utilization liquidity pools. In our case, we are taking different approach because we are taking the approach, the risk-based approach, which is inherited from the traditional finance, when we are considering the overall system solvency and conditions of the bailout pool and the risk level of particular user position to define the interest that borrower pays on their loans, right? And actually, we think that this approach makes the overall system more stable and actually makes the system more solvent and makes more sense rather than approach as it implemented in compounds or other with this asset utilization thing.
Yes, and it does seem that even in the talks we've had before, you are progressing from pre-existing platforms and examples. You had the opportunity and the luxury of looking in to some of the things that have existed to perhaps tweak and improve on those ideas and that code. Now, in that sense, are you perhaps a first mover in the Polkadot ecosystem, that layer 0 architecture? And do you feel that you're going to capitalize effectively because potentially you are moving in that space of, as we talked about, that interoperable money market zone? We've seen the likenesses of Compound, Aave, you've mentioned synthetics, all doing disparate things or specific things. You seem to be integrating them all and on a very sophisticated network. Are you confident that you can lead out something that is better potentially or improving on pre-existing systems?
Yeah, absolutely. So first of all, we think that the architecture that we have developed for Equilibrium definitely makes a lot of sense and actually innovates in the industry and basically improves the sort of architectures that we currently have on the market. And on top of that, we think that introducing the money markets on Polkadot, it's actually the first step for us because we definitely think that the activity around trading and around exchange eventually will be way higher than the activity on the lending platform. However, the current market circumstances actually look like that everyone loves lending, everyone loves liquidity farming, and we also will introduce liquidity farming program to bootstrap the liquidity on our platform as well. And actually, we think that the launch of the lending functionality will be a good way for the initial user acquisition and the bootstrapping of liquidity on the platform overall. And eventually, we will be launching the decentralized exchange. Right, we're already working on the spot market functionality, and we will basically drive the attention of our lending platform users to our exchange, and expectedly they will be attracted to do some trading operations on that.
Mm-hmm. And that makes sense why you'd have that DEX built into the whole integrated architecture. Now, obviously, you mentioned one of those key advanced features as well. That's the bailouts for managing their debt. But you've also got the cross-chain element, the highest possible liquidity point, liquidity insurance, and also the all-in-one design. So obviously, for those people who want to look more into it, they can go and study those extended or advanced features. But are there any that we need to know about right now as you're progressing with your team, other than the key bailout system?
Yeah, I already mentioned the risk-based approach, which is actually based on the risk management system, which is on-chain and also quite innovative. As I said, it's taking into consideration, firstly, the overall system solvency. Secondly, it's constantly assessing the volatility of underlying asset portfolio to figure out how risky it is. And the third thing that it takes into consideration is obviously the culturalization level and risk level in the particular user positions. Mm-hmm. So maybe the third thing is, which is really interesting, is the programmatic interest rates. So which means that borrowers, the interest rate for borrowers is actually fluctuating depending obviously on system solvency and the bailout pool liquidity. So which means and the actually it depends on the collateralization level and risk level of the particular user position, right? And actually borrowers, they can affect their interest rate by setting more collateralization or providing less volatile collateral into the collateral basket, which is really interesting. And actually, if they provide per se less volatile collateral or provide more collateral into their baskets, the interest will be decreasing. So there's no option for borrowers to affect the interest rate on their loans and other platforms, right? Because the interest there actually depends on the asset utilization or actually on governance, which is setting this interest rate for that. Yeah, so I think these sort of core system components, as I said, the risk management system, the programmatic interest rate, and the bailout system, actually makes our platform more sustainable and quite attractive to the end users.
Got it. Now, obviously, there's a lot of money that's going to be flowing through the entire platform that you've built at equilibrium. So what about security? Because as you'd appreciate, we hear a lot of arguments coming from Ethereum saying they are a very robust, very secure network. They are very decentralized by design, and that's all valid and technologically provable. So when we're talking about Polkadot, for example, how do you sort of cater for the needs of the users when obviously many of them don't need to know deep knowledge of the blockchain itself, but they do definitely require the seamless UX, UI experience. And on top of that, they also need to have that security and peace of mind.
Yeah, first of all, from the technological perspective, Polkadot is a really decentralized system, right? And so there is no risk of central counterparty or a single point of failure for the application, which makes a lot of sense. And we definitely taking the advantage of that as well. In terms of equilibrium, again, we are quite experienced in building applications. So we are always actually providing the full test coverage for the code that we're developing. And obviously, we are doing sort of cybersecurity audit for this system. Specifically for these purposes, we have booked one of the most qualified cybersecurity auditors in the space, which is QuantStamp, who already accomplished the first batch of audits of the core system components. And actually, we had pretty good results with that. And we actually like taking the security aspects very seriously, right? And we are undergoing cybersecurity audits. We are standing for the complete decentralization for the platform, both on the operational side of things and also for bridges, for basically custodian aspects as well. So like again, combined the full decentralization in the platform combined with cybersecurity aspects, I think make Equilibrium really a reliable and trustworthy platform.
That's good to know, because I think that's a really important question that many of us have had, and not just with you, obviously, and your team, but many with regard to the value proposition of Polkadot in context of security. And you mentioned very importantly that it is decentralized, and these are coming from the founders. This is the kind of information we need to hear. Now, what about the team? I've looked through. Things that stand out are specializations, quite simply, from DeFi, banking, and blockchain. So do you want to just give us a bit of a reference, without going to individuals too much because of time, how you are confident, or why you are confident rather, in your team, and give us a few reasons perhaps, why you can say that with proof in terms of things that they've done to give us confidence that this team can continue for years, not months, to really build this out as a very viable and successful company.
Yeah, so the current team is comprised of 23 team members. Most of them are working with us since 2017, so it was quite a long journey. The 16 team members are on the dev side. We have a decent team of the backend and blockchain developers. We have a great team of front-end developers. You basically can look at our website, test out our product line, which is already up and running on the testnet, and basically have a hands-on experience with that, and to figure out how exactly we're approaching the product developments. I think that makes a lot of sense. And we're actually paying close attention to the product development, so that interfaces that we're rolling out are really user-friendly and makes the user experience really slick.
Yes, and I think that's transparent also on the GitHub as well. That's one thing I like about your team, is that you hide nothing. You're open source. Is that correct at the moment?
Yeah, so we are not developing in open source like in real time, because it's really time consuming. You always need to basically pay very close attention to what exactly you're committing to the GitHub.
Okay.
However,
so not in real time, but you do release open source code as you move.
Absolutely.
Okay.
Absolutely. Yeah. We do these releases. We do that like either bi-weekly or monthly. So this is how we approach that. So most of the, like, some of the code base already open source in terms of our Polkadot based developments, and more code is coming over.
Got it. And I also wanted to ask you as well, Alex, do you also have some code that you do protect, that you keep under wraps, because obviously there's challenges out there with appropriation, with, the theft of code, essentially. Not that that's a bad thing in the open arena. We want innovation, but obviously you want to protect your own code as well. So how do you manage this when you are working so hard to be open source over time, even if it's not necessarily in real time?
This is a very good question, because we were always thinking of whether we're taking this sort of competitive advantage of that or not, because obviously you are risking to be copied right away when you're just rolling out everything to the open source. So again, eventually we'll be fully open source platform. I think that here is no risk in that if you manage to bootstrap the platform, bootstrap the liquidity, because eventually your products are basically the success behind your products actually are your users, your user base, and those who are trusting your platform, right? Rather than just code, which is somewhere on GitHub. But you're right. In the very beginning, in the very early days, it might be a little bit preliminary to roll out the whole code base to the open source. However, again, we are undergoing the cybersecurity auditing process, and obviously these reports are publicly available. So from this perspective, you can always verify whether the code is safe, whether it's the same code version running on the blockchain. And eventually, as I said, we'll be rolling out everything to the open source, but we think that it will be a little bit later. So for now, most of the system components are open source. However, just some of them are still in the private repository.
Got it. And thank you for that transparency. I think it's really important. And obviously, we want to be able to see some code. That's part of the key elements of trust we do need, even in the trustless context of the blockchain.
Yep.
Now, when it comes to an exciting development that's coming up very, very soon for you, without trying to sort of sell this, I don't like that idea, but I would love if you could tell us more. And that's the PLO. So you've got the parachain lease offering that is coming in within hours, or not, if not days, certainly on in April the 12th, I should say. Now, do you want to just walk us through this, really explain what the PLO is and why it's important to know now?
Yeah, so in just nutshell, the PLO mechanics is a very innovative thing, which is very Polkadot specific. And actually, this mechanics is sort of crowdfunding mechanics, which allows substrate-based projects to participate in parachain auctions and to secure their parachain slots by raising dots from the community who actually supporting their projects, their developments on Polkadot, and basically staking their dots for in the parachain auctions for these projects. So we also taking this approach as well. And we have outlined the comprehensive two-phase strategy in terms of our PLO, which is a little bit different to what other projects are offering, because the idea behind our model was like not just to secure slots, the slot once, but to think of how we can secure slots in the future after the first lease periods will be accomplished, right? Because you don't have the infinite amounts of tokens you can allocate for parachain offerings, right? You have just limited allocation, and you need to use that as much efficient as it's possible, right? And in terms of our strategy, we have, as I said, two phases. The first phase is kicking off on April 12th, this Monday, and basically the mechanics is quite straightforward, very simple. The DOT token holders can just swap their DOTs for our EQ tokens, and the specific swap rate, which is 0.07 DOTs per one EQ. Actually, they will have the bonus, which is depending on the contribution size, the sort of parachain lease periods they are committing to, whether it's 1 year or 2 years. And the highest bonus will get those who will be contributing over 10,000 dots for 2 years. The bonus for them will be 25%. The thing is that this mechanics is completely risk-free from our standpoint. So first of all the funds collected through this mechanics will be managed by the reputable custodian, which is Copper. They are regulated in the UK. And also our partner, Signum Capital, they kindly committed to being on the multi-sig there. So these two counterparties will be managing funds. This will be guaranteeing this transparency.
And I apologize for jumping in, but can I ask you, how do you feel about those third parties and the multi-sig aspect when we hear about DeFi narratives of progressing or aiming towards the removal of those scenarios eventually? Obviously, having that custody is something that some parties want to see as self-custody. What are your thoughts on that?
So specifically in the context of the PLO, the management of these funds is more or less centralized process, right? Because there are no smart contracts on the relay chain. You need to collect funds on just single blockchain address, right? And definitely you cannot afford to manage these things just solely, right? Because you need to have somebody who will assist you with the transparent management of these funds, right? That's why we decided to engage with the reputable custodian and to engage with one of the most well-known ecosystem funds, which is Signum, and we really thankful to them that they actually joined us to help us to manage this bunch of funds. The hard cap for the swap is 250,000 dots, which is roughly like $9 million at the moment. So it's quite a lot of funds, right? And you definitely need some transparent mechanism to manage these funds and to transfer them across blockchain addresses, right?
Yeah,
and to have some transparent procedure for that.
Exactly, and it also goes back to security. We're talking a lot of money here, a lot of opportunity as well, and we want to make sure that the people who are helping you in this third-party context have a reputation. So thank you for disclosing that. I'll make sure there are links for those who want to know more about those third-party entities that you've engaged with. Now, you mentioned that important first step, and that's the swap that's coming up April 12th. That's phase 1. So what about phase 2 as well with regard to the crowd loan, the staking? Can you tell us a bit more about that in the plan or the roadmap?
Yeah, sure. Just maybe one thing I wanted also to mention with regards to the first phase is that all the participants of the first phase they are getting the free rides on the reverse swap, which actually makes the exposure to EQ tokens quite sort of mitigating the risks of this exposure, basically, because at the end of the parachain lease periods, they have the right to submit EQ tokens back and to get their DOT tokens back, right? Just withdraw them from the custodian. Obviously, in case if just per se EQ token will not perform that well that expected, they always hedge their risks by having this reverse swap opportunity, right?
Okay, so that's a peace of mind technology that's built into that. And obviously, there's information about this that you've got write-ups on. I've noticed, I tweeted some of them today with regard to your Medium articles, I think it is. But it's great that people have been able to access information to the lead up to this swap.
Exactly, yes. And with regards to the second phase, what I wanted to mention, that it's a kind of more or less standard crowd loan procedure. So basically, the idea behind that that participants can basically stake their dots into the crowd loan module, which is decentralized, up and running on the relay chain of Polkadot, and then they will be entitled with interests in the Q tokens, which will be based on their fund stake for our parachain. So the interest will be quite decent, like it will be depending on the size of their contribution, and at max it will be roughly like 25% APY. It definitely will be covering the opportunity costs, because you always have two options, either to stake for validators on Polkadot or to stake for some specific projects. And you need to choose to figure out which is more attractive from the perspective of your potential benefits that you get from this staking. So obviously we'll be covering these opportunity costs, as I mentioned, and paying the decent premium on top of that.
And it's great that there's so much opportunity to select different ways to stake, or even when we go back to the swap, the opportunity to reap the benefits of different rewards based on how much we're prepared to commit in terms of time. So essentially the rewards systems is really what's going to attract a lot of people, I would imagine, to both these phases.
Yeah, absolutely. So you're asking how the particular period will be selected, right?
Well, essentially, because there's differentiated times that align with types of rewards, that's quite attractive because it gives people flexibility, but in both phases. And I think, and that's really an attractive thing. But the point you're making is that these are rewards-based systems. These are incentivization methods to really get people engaged with your platform. So I think that you're going to have a lot of success in both these phases. When do you expect the crowd loan to roll out?
So we expect to roll out the crowd loan simultaneously with the launch of parachain auctions on Polkadot. We don't think that we'll be participating in first auctions because potentially they will be really overpriced, and there will be sort of huge activity around that. A lot of demands for sure. We think that it's more sort of wise approach to look for layer auctions like third, fourth, fifth, sixth, whatever. We'll see. Basically, we'll see. And as I said, crowd loan will be kicking off as soon as parachain auctions will be launched on Polkadot.
Well, it's great to know that you're in the running right now, because obviously this is the first few waves of the parachain movement anyway, and already there's an immense hype with regard to the productivity surrounding the parachains themselves, and each of them seem to have a specialist or a niche market themselves. So that's going to be interesting to see how you evolve there. Now, with regard to some of the criticisms, I wanted to ask you about these. One of them was a response from the community was that they felt there was a concern because there was perhaps no cap or no initial or cap for individuals in terms of contributions for this. Do you want to just touch on this? Is that the case, or are they incorrect?
So first of all, we're not setting any caps for individual contributions in the both in the swap and the crowd loan. We actually don't think that it represents any kind of issue, because I don't think that it will be like whales who will be contributing like 250,000 dots just in one chunk. I don't think that this is the case. So the principle behind the swap. We obviously, as I said, we set particular hot caps for both phases, respectively 250,000 dots for the swap and 750,000 dots for the crowd loan mechanics. Altogether, it's 1 million. We think that it will be enough to win the parachain loan eventually. It's kind of our assumption. And in terms of the mechanics, it will be first come, first serve. Obviously, we have the whitelist specifically for the for the swap, which is already successfully closed. We had enormous interest around that, like literally thousands of subscribers. And the thing is that those who got whitelisted and passed KYC, because obviously KYC is required by the custodian because they are regulated in the UK, as I mentioned.
Yes.
So these KYC, the users, they will have the priority over other participants if we run into the hard cap at the end of the swap. The swap will be lasting for 2 weeks, by the way, starting April 12th. Yeah.
Okay, so you've got 2 weeks from the day April 12th, which is coming up. And obviously it's important people know that you do not have that cap. But when you was explaining the answer, you mentioned you don't think the whale, etc. Do you think that that's, a reasonable response when making that assumption? Wouldn't it have been better to make sure that there is a prevention mechanism in place in case? Because isn't it fair to say that a whale could technically do that?
So hypothetically, yes. Hypothetically, they can do that. Again, practically, I don't consider that as an issue, right? Mm-hmm. Because we don't think there will be the contributors of this scale, like based on the whitelist results and stuff. So we think that there will be quite reasonable numbers. Eventually, we definitely will manage to secure, I think, all the funds required for securing the parachain slot, because again, we see a lot of interest, and we currently almost oversubscribed for both phases. And yeah, we just see. So, and obviously, like, again, we have a decent token economy behind our EQ token, and the distribution is quite wide because we had several rounds of token distribution already behind, including the token swap, and recently we closed the private investment rounds with a quite decent lineup of funds participating there. So from this perspective, the distribution of the key tokens already diversified, and we don't think that any kind of whale participation, specifically in the PLO, will affect the sort of the other movement. Forces in terms of like, yeah, absolutely. Yeah.
And that's good to know, because we want to see that widespread distribution, quite sincerely. In the past, there's always been problems when it's been concentrated to so few. And obviously we can talk about that raise later in the interview. Love to know a bit more about how you did distribute that recent raise. With regard to going back to the PLO, you've covered almost everything. With regard to insurance, do you want to just touch on that? For peace of mind for those who are engaging in the platform, especially the PLO coming up, you've built in insurance, through the model to I guess add another layer of value to the platform to ease the mind of the user.
Yeah, correct. So the insurance is sort of best practice from our standpoint. So we already use that in our EOS-based product line because we have the insurance fund there, and we actually were the first DeFi project that consciously established its own insurance policies, right? So on EOS we have the smart contracts, which holds a decent amounts of funds, which is acting as sort of a last resort in case of some crash of the system, some undercapitalization per se, and these funds will be used to recapitalize the system back to 100%. And we will be taking the same approach on our Polkadot-based product line. So on top of these bailout mechanics, which means that we have the liquidity insured in advance against the liquidations. On top of that, we'll have this last resort of the insurance funds, which will be covering the majority of losses if something wrong goes to the system. Yeah.
And that's good to know, because we've seen how important that can be in the past when those kinds of insurance funds have been needed. And also on top of that, you're also working with different Oracle firms or technologies as well. I noticed Bend is one of them. How important is it to you to work perhaps with more than one Oracle, for example, or the quality of the Oracles that you do have, given that we're also in that context, we've seen failures in the past with different platforms?
I think the Oracle topic is the cornerstone for every blockchain application, because you are very much relying on the price fees that you have on chain, because you are doing your mark to markets according to this information and this data they get from the external sources. And obviously, since we are very experienced in building DeFi applications, we know how it works. We have the diversified Oracle system on EOS, and on Polkadot, thanks to the interests from the major market players, we have quite a decent lineup of Oracle providers who are intending to work with Polkadot-based projects, and this lineup is even more reliable rather than the lineup of oracles on EOS per se. So we have partnered with several Oracle providers, including Chainlink, Bluezell, Band, and also Kylin, which is Polkadot native Oracle system. We also have our own Oracle, which is also feeding prices on chain, which is based on the off-chain worker technology, which is a real breakthrough for the blockchain industry, and so this actually made happen thanks to the Polkadot rolling out. And so in terms of that, we have quite decent Oracle system with multiple price sources. And eventually we're building median across this data, and this makes the system really reliable.
It's a great answer, because for years I've been also advocating for, I guess, a multi-oracle approach, just like we see with the multi-chain narrative from the layer zero. And you're literally proof as to why that's important with your answer there. In the future, I would imagine you'll also add more with the likes of API 3, or whether it be super oracles coming, or whether it be the likes of Plyth Network. There's many coming, I think, also that are going to really showcase next gen developments in Oracle. So it's great to see how you've articulated this as such a core and integral part of quality design. Now, what about with regard to the integrations and partnerships beyond this? Things like Math Wallet, Moonbeam, Staffy, QuantStamp, we know why that's there with the all important audits, and then Curve as well as in there. Because you are, the CEO and founder, I'm sure there's more than those. So what's the primary, I guess, reasoning for these kinds of integrations, or is it such that you can't articulate them because there's so many now and coming? It's just that the integrations are real. That's the thing I really want to get at as well, is the quality and the realness, instead of hearing constant narratives that are just about fluff and partnerships, for price sake.
Correct. So again, first of all, we think that every partnership should bring, first of all, value to the project, right? It should not be just nominal partnership just to get the exposure, marketing, whatever thing, just fluffy thing around these partnerships, right? So we're standing for more fundamental approach here, and we consider every potential partner from the perspective of which value this particular partner will bring to our project. All right, and we actually have several aspects here. So first of all, this is the liquidity aspect. We are thinking of whether the particular partnership will bring liquidity on the platform. Secondly, it's obviously the user acquisition aspects. We are thinking of whether the particular partnership will drive more users on our parachain. And obviously, we are always taking into account the interest of the Q token holders, whether they benefit from the particular partnership or not. So these three aspects combined are the criteria for partnerships that we're conducting with ecosystem players. You mentioned several of them, like specifically, we are super excited about partnership with Moonbeam because the DeFi ecosystem on their parachain will be really vibrant, and we think there will be a bunch of projects arriving at their parachain from other blockchains, including Ethereum. We already heard of partnership with per se SushiSwap and some other decent market players. So we're excited to port our assets onto Moonbeam, specifically our EQD stablecoin, because we think it definitely will be a win-win for for us and for participants of the Moonbeam ecosystem as well, because they will have the reliable mean of accounting, of payments, and obviously it will drive the liquidity on our platform as well. So you also mentioned the collaboration with the Curve team. We are super excited about this collaboration as well, because we think that it will bring value not only to Equilibrium but to the entire Polkadot ecosystem, because you obviously know that the automated market making technology of Curve is working pretty well for swapping the homogeneous assets, specifically stablecoins. However, it also can be used for swapping other homogeneous assets, and we all know that on Polkadot there will be a bunch of them, specifically wrappers of different assets from various other blockchains, right? I'm aware of at least like 4 projects that will be bridging Bitcoin to Polkadot, like Interlay, RenVM, WBTC, and Chainx, right? And there will be like at least 4 wrappers on Bitcoin on Polkadot, and obviously their holders will be demanding the sort of handy tools for swapping these assets at a very low slippage, right? And obviously this Curve technology will allow these kind of swaps. So we think that this development will definitely bring certain value. It's actually supported by the grant from the Web3 Foundation, and we already have almost accomplished the developments according to these grants. So we basically have accomplished both milestones, right. And currently we're talking to the Curve team how exactly we'll be running this technology on top of our parachain.
Yes, and you know what's interesting is that you mentioned all these key integrations, and I'm sure there's more coming that you're not able to disclose yet and will in time. But the partners behind the scenes, that have now come to the fore with the raise, for example, we start to see, I guess, the interconnections with the Web3, for example, with Polkadot, with Huobi Global, Interlay, as you mentioned, Bancor, MyKey, P2P Validator. They all start to make sense even more when you understand these integrations, because they fit so well together. So what is the role, for example, when we speak of partners in this sense? Is it similar to the integrators, or those that you've literally partnered with for technological development, when we see the likes of Binance, for example, Huobi Global, or are these more strategic in the sense of obviously some of these represent exchanges?
Yeah, so obviously we have these ecosystem partners as well, who are considered not just the technological partners, but the partners who will help the project developments in the ecosystem overall. So, for example, just a good example here, in terms of the latest rounds, we got investments from the Block Dream fund run by OKX, and definitely this is a key partnership for sure, which will be the key to the ecosystem of OKX for sure, and definitely it will be super helpful to the project. We are constantly in talks with the Huobi team, with the Binance team regarding what exactly how exactly we can bring value to their ecosystem and how they can help us with the project development. There will be more announcements coming over. For now, I'm not sure I can disclose
I'm not going
of that, but
I'm not going to push for it. I'm not in the mood. I don't know why normally I push more, but I will say this is that it was good to know that you did have those partnerships, forged, because quite sincerely, especially in the context of liquidity, when we talk about money markets as well, you're going to need a lot of these connections for the pragmatic sort of approach you're taking. So for, I guess, people, whether they're speculators, whether they're users or prospective users, they all want that peace of mind that you have those key engagements set up and those key, I guess, just dialogues and discussions at the very least. And also it's good to see some of those others, like as we mentioned before, Interlay, as you're discussing, that makes sense once again, those sort of partnerships, because you want to see these integrations and these bridges from BTC across, and they're enabled by these technologies. So that's great. Is there anything else you want to say with regard to those particular partnerships, strategic ones, especially given you are the CEO?
Yeah, so I think like first of all, all these partnerships mean a lot to Equilibrium. We got the fresh influx of liquidity during the latest rounds, and we also got not just solely investors, but more strategic partners for this round. And we think that specifically securing the parachain slot is actually requiring this kind of partnerships, because you cannot secure the slots without having the influential investors aboard who will obviously help to achieve that.
Well, let's talk about that. Come on, let's get real. So let's name some names. So I wrote them down. There were some big ones here. CMS Holdings, Signum, as you've mentioned, they've already helped you with that third-party entity. Genesis Block Ventures, Hypersphere, I think I mentioned, AU21, Inclusion Capital. I don't actually know that one, but I'll look into it more. PNYX or PNYX, I'm not sure how you pronounce that, Ventures.
PNYX, yep.
Yeah, and FBG, that was an interesting one given the sort of mixed sort of scenario with them in the past. But I did notice strong representation in China, Asia, particularly with these. Hypersphere, very well known in the Polkadot ecosystem. I thought it would be strange if they weren't there. So I wanted to get real about this as well, in that what was the process for you guys in terms of how do you decide at the end of the day who is going to be the one that is successfully, enabled or given able to invest at these levels? Because you would have had a lot more capitals come through wanting a piece of the Equilibrium pie. So it must be tough. So how do you deduce? How do you go through the process to make sure there's more than money in hand here? There's going to be longitudinal support, proven more than just in what they say as well. How do you guarantee they will be with you long term?
Yeah, good question. So first of all, we were really oversubscribed in that round, and I sincerely apologize to those guys who could not manage to make it aboard. We definitely will prioritize them for the next round. And in terms of the current lineup of funds, we definitely had long conversations regarding how exactly we'll work together after they do their investments, right? We have particular arrangements with them, with all of them from this list. For obvious reasons, I cannot disclose in full detail what the arrangements behind that. But in a nutshell, we do have certain commitments from them, and there will be more announcements coming over very soon.
Okay. And can I ask you just one thing? Obviously what's great about this interview is you have not, reviewed other questions. I have not submitted any questions, so you don't even know I'm going to ask you this. But with regard to lockups, have you made sure that by the blockchain, by transparency of design, that they are provably locked up for the long term to support you?
Yeah, so this is pretty straightforward. We have certain lockups structure for tokens that we distribute, and certain allocations are subject to a particular vesting schedule. So specifically for the allocation that we have distributed via the latest private investment rounds, all these tokens are subject to 1-year linear vesting. And we are pretty confident that it should work out in terms of the overall kind of management of liquidity for our token and so on and so forth. So like if we touch on the previous distributions, we had the token swap, and those tokens are also subject to 1-year linear vesting. So here may be worth mentioning our strategy with regards to Kusama. Because we recently have made a decision to participate in Kusama auctions as well, and more details are coming over, I believe, next week. I will shed more light on that and announce our plans with regards to Kusama auctions. So in broad strokes, the tokens on Kusama will be launching the separate tokens other than EQ tokens on Polkadot, and these tokens will be also distributed to the existing EQ token holders. And actually, there will be quite interesting mechanics. I think this approach is also quite unique for the ecosystem, because there will be the lock drop approach, and basically those token holders who already have vested tokens on their hands, they can can get tokens on Kusama, but the sort of requirement here will be to log their vested tokens in the specific staking module on our substrate, which is quite interesting, right? And they will be locking the tokens for 3 months, and they will be entitled the respective amounts of tokens on Kusama.
I'm sure you're going to have a lot of people doing that, because essentially that's a very significant reward, or that's a significant, I guess, offering that you're providing through the Kusama network, because it's a double up for them indirectly, without using that term perhaps, because you're really being generous there. And I think more information is going to come through, as you said. I certainly don't know, but I'm suspecting that is quite generous. People will be staking for that reason. And as you'd appreciate, Kusama is just so popular now that people understand it's so much more than just that playground, and that test net that many people have assumed it to be. It's actually going to build its own replete and robust system, simply because people will be using it substantially as that dev tinkering space to really experiment with what this technology can do. Now, with regard to EQ, with the token itself, utility is the game. We've talked about this pre-interview as well. Very important. And also we want to clarify the pre-existing token. So people understand the nut with relation to EOS really isn't in this conversation so much, but people need to know that. So do you want to just explain the token itself? We've touched on the vesting already, but it is important, I suppose, that people understand exactly, how that's designed and what it's for in the various aspects of utility.
Yeah, absolutely. So EQ token is the key asset for the entire Equilibrium ecosystem, and it's actually obtains a lot of utility there. So first of all, it's obviously the governance token, which allows token holders to select validators and to vote for important system parameters. And also, it will be acting as the platform currency, right? Because the token holders will be covering all the fees in the system, including fees for broadcasting transactions on our blockchain, and obviously it will be used for covering all the fees of the platform. Then it will introduce quite a lot of staking opportunities, right? Because obviously staking is the current sort of driver for DeFi growth and stuff. And what's maybe the most interesting and the most significant use case for EQ, it will be used as collateral and bailout liquidity, which makes it a little bit similar to the SNX token of Synthetics. Right. Yeah, I think this use case will be the most significant one, and will definitely drive a lot of interest to that. So on top of that, we'll be introducing the liquidity farming program. Right, we have allocated 10% of the overall token supply for that, and definitely will be the incentivization for users to bring liquidity on the platform, specifically in EQ tokens as well, because they will be able to earn more tokens through this program as well.
Yes, and when you couple that with the tokenomic design, one of the things I don't often say, but I think I can say this comfortably, is that the price is going to correlate with all these innovations as they move through. I don't want you to comment on that. Obviously, you can't. But that's the natural supposition people are going to make when they understand the fullness of this utility design. Because nothing does correlate perfectly. We know that. We've seen the history of crypto itself. Speculation itself is so powerful that it can override everything sometimes. But when we look at this piece by piece, we see logic behind the growth and trajectory potential of this. So thank you for explaining that. Now, hopefully there'll be more information come through as you start to showcase what you can do on the parachain and start to be an active technology to engage with as a user. Now, one thing I really wanted to ask you about was this idea. Dan Rieser has recently tweeted about it, who you would know, who is an ambassador for all of Polkadot, especially the Kala, for example. And he mentioned that sometimes there is a situation where people that they misinterpret, or they falsely assume that some things using the suffix of, or the prefix rather, of Polka are actually part of the Polkadot parachain ecosystem, when in fact they're not. So you've mentioned throughout this interview parachain. That aligns with legitimacy according to Dan Rieser at the very least, and certainly how I would see it. Do you see where he's getting at? And would you regard yourself as one of those legit projects that is definitely connected to the Polkadot ecosystem, that is very clear?
Yeah, very
Tough
legitimate
question, I
statement.
know.
Yeah. I think. Look, first of all, I think that the project that eventually gets the parachain slots on Polkadot are those projects who definitely deserve that, right? Because the process of parachain auctions is very well designed, and really those projects who will be able to make it will be the most decent projects, and they will definitely deserve to have the slots, and they will actually receive the substantial support from the community, from the investors who basically contribute their dots for their slots. In terms of projects who are calling themselves parachains right at the moment,
or
actually
perhaps,
stating,
or perhaps they're calling themselves poker something, but perhaps aren't related, and it can cause confusion.
I think that basically, again, so the projects who already have a significant progress with the development, they definitely deserve the slots, right? We have, like, I believe, over 30 projects already who have the technology in place, and we see the activity around whether Rococo testnet.
Exactly.
By the way, Equilibrium has already tested it through and actually got the slots through auction on the Rococo testnet. And there are several other decent projects who also got the slots there, and actually they have proven their
merit, their value. Yeah, exactly.
Exactly, readiness to get deployed on Polkadot or Kusama. And I think these projects who have proven themselves, they can basically mention that they eventually get the parachain slot.
I think that's a really good point.
But yeah, and maybe one thing that I also wanted to emphasize here, that anyways, if you even will not manage to get the slots, you still have an option, an opportunity to get connected with the Polkadot network, right? Because you can become the parathread, right?
Exactly.
And actually roll out the network in the pay-as-you-go format.
And
right?
you'll still see indicators of that through the Rococo process as well. Anyway, you'll see rigor and effort being had by the teams that really want to achieve that parachain state anyway. And as you mentioned, there's other options for them, but we see those indicators, we see those hints, and any research can go out. It's all publicly available for them to see. Essentially, those who are vying and trying for those parachain slots.
Yeah, absolutely. That's what we'll see in the close future.
Well, I appreciate so much of everything you've taught me today, and hopefully all those listening have learned even more about Equilibrium. There is one last thing I want to ask you, and that's with regard to marketing. Now, in crypto, that always is a bit of an uncomfortable question for someone like you as the CEO. It's probably the last thing you want to talk about, but it is so relevant in the crypto domain, especially when things are so unusual in the beginning, when things launch. And you'd be pressured, I'm sure. Let's be real about that, to make sure that the investors get a good start, in terms of making sure that there's a bang for their buck. There is also, the knowledge is spread about the technology. That's important too. So how are you approaching marketing so that essentially the word spreads? Essentially, people who are in the crypto know, or those who have huge reach and platforms can start to work and spread the word, so that more people can perhaps tinker, experiment, use, and learn about Equilibrium?
Yeah, so first of all, we are standing for more organic approach, right? So we are not forcing, whatever traffic on our platform and stuff. We think that it's really important to educate your community and to provide sort of organic growth for that. Otherwise, it really looks really like suspicious, whatever, when you see this sort of approach, when the growth is literally forced thanks to using some specific marketing instruments, whatever. Again, at Equilibrium, we don't think that this kind of approach brings any value to the project, right? Because you eventually need some organic user base, organic liquidity on the platform, and that's what we are standing for. So again, first of all, we think that we need to get community educated, because the platform which we are building is really sophisticated in terms of its functionality and stuff. Per se, we are actually creating a lot of content which helps our users to educate themselves about what exactly we're rolling out at Equilibrium. For example, we have rolled out a series of articles which covers the fundamentals of our platform. You can find it in our Medium. We also standing for educational approach in terms of like spreading a word about the Polkadot ecosystem as well. For example, we have recently hosted the Polka Defiance event, which was quite successful. We got over 2,000 participants on Crowdcast, and actually we got quite a bunch of teams speaking on this event. Quite decent lineup of speakers there and panelists. And obviously, it's not just the marketing for Equilibrium, but the marketing for the Polkadot ecosystem overall, because we can spread a word not just about our products that we are building at Equilibrium, but also highlight some specific aspects of Polkadot, its advantages and stuff. So obviously, we think that this kind of things obviously working not only just for our project, but for the Polkadot community and the Polkadot ecosystem overall. Yeah.
Alex Melikhov, I can't thank you enough. I sincerely mean that. Thank you for explaining also. I've never had someone in a CEO position explain it so clearly, that you're taking the organic approach. You're very clearly making sure that the whole premise is about making sure that the text speaks, about the users speak, and let this flow as it should. And clearly it's not about being adverse, but you're not trying to do the pump and dump marketing to the million, strategy in the sense of price. I really respect that, mate. And I want to make that really clear. And I thank you for your time. Obviously, I have the same premise as well. And I'd love to support you throughout this process and continue doing updates for you for that same reason of organic and education. They do matter. And certainly we want to see people engage for the right reason as well. So Alex Melikhov, just to recap, it's very important people know it's Equilibrium, all about Polkadot in terms of how this technology is really going to flourish and evolve today. It has engaged with other blockchains in the past. We've talked about that today, but most importantly is about that first interoperable money market on Polkadot. And we talked about the why. The future, who knows? There's a very bright one for you. I'm sure there's going to be more interconnections with other chains in the future. There's already allusions to that with the things we talked about today. But most importantly, I wish you all the very best with your team. Thank you for being real. Thank you for not BSing on the blockchain and getting things done and building. That's what we care about. And the others that don't will fall as the real builders come forth and continue for decades, not months, not pump and dumps, but the real stuff. Keep going, Alex. Keep going with your team. And I wish you all the very best, mate.
Thank you very much, Brad. Thanks for having me here. And I was really excited about our conversation.
You're very welcome, mate. Take care.